Welcome back everyone to the Money Control live stream. You're watching markets with Santo and CJ. Well, we had a strong start and it looks like we're going to have a strong end as well. If you look at the benchmark analysis, Nifty and Sensex, they're largely trading around the day's high, and it seems like the bullish momentum has continued on the Wall Street from the previous week. If you look at actually the big gainers of the day, they belong to the mid cap and the small cap space. The Nifty mid cap 100 and the Nifty small cap 100 index both outperforming the Nifty 50. So clearly, Santo, a totally broad-based up move that we have seen in the market,
and largely driven by global cues. But it's a bit surprising, CJ. The whole premise here is that Fed will cut rates, sooner than later, because the economy is going, already in a recession, and it's only likely to slow down some more as the full effect of the rate hikes kick in. Now, when that happens, obviously there's going to be some impact on the earnings, but that is not something the market seems to be looking at this point. At this point, everyone just seems to be focused that rates will fall at some point. There will be easy liquidity. Fed will pump in more money, and stock prices are set to go up again. So the whole focus on earnings just doesn't seem to be there at this point in time.
I think, Santo, what has also provided relief to market participants is the fact that we have not seen a deterioration in earnings in the way that a lot of people feared. I mean, if you look at the price performance of the June quarter, the Nifty fell almost 9-10%, right? And within almost 4 weeks, we have recovered all of those losses. I mean, we are about to be positive for the year.
Yeah, but there is also very low participation, especially from the domestic investors. And besides that, we have not seen, as you rightly mentioned, we have not seen any major earnings disappointment. That is probably one of the factors that has helped the market retain its recent gains.
Well, that's it, Santo. Let's quickly dive into some of the stocks that are on radar. And the biggest one today, of course, making a lot of news is Yes Bank. The lender has finally got the the white knights that it was looking for a very long time. It was looking to induct strategic investors into the bank, and finally Carlyle and Advent International have joined the table of Yes Bank. They are going to cumulatively invest about $1.1 billion in the lender. Now, clearly, this was something that was expected, that the Yes Bank was trying to do for a long period of time. A lot of people thought that this could be capital that the bank might utilize to get rid of a stressed asset. But in light of the ARC that they have opened, Santo, they no longer need to utilize this capital to take care of bad loans. Instead, they can probably utilize this capital to boost growth and maybe catch up to some of the bigger peers who have left it behind over the past 2 to 3 years while Yes Bank was down and out. Now, I mean, for me, I think this is a very big positive. Maybe it will not play out in the immediate, short term or even in, medium term. But this, for a longer term perspective, having professionals such from Carlyle and Advent, along with other, major financial institutions who are on the board of Yes Bank, I think it can only do better for the bank. And to learn more about this, actually, we have our colleague Nisha Poddar joining us to provide more insight onto what this deal means for Yes Bank and how it came to fruition.
It's a huge amount of confidence capital that is coming in for Yes Bank, which is on a path to finding solution after the bailout which was done by RBI's supervision by State Bank of India. And this capital infusion is the most critical part of the overall solution to their asset quality as well as future performance. Now, Carlyle, which has put half of the $1.1 billion coming into Yes Bank, is really betting on the future growth potential and says that this capital infusion may allow Yes Bank to capture a large part of the market from other NBFCs as well as smaller banks which do not have that capital benefit. So that's one aspect. Second one is going to be the wholesale market and the wholesale loan book that should be lowered and de-risked from the asset quality concerns, and on the other hand the focus should be on the retail and the branch network. So that is going to add another thrust. And then the digital aspect of Yes Bank, which already has the infrastructure and can be bolstered further. But then Carlyle also states that the execution risk in terms of manifesting all these parameters and potential growth aspects is something that is incorporated in the valuation of this bank as part of the transaction.
Well, Santo, there you have it. I think clearly Carlyle and Advent both are betting that Yes Bank can probably go back to the diamonds days that it used to have once upon a time. What do you think?
CJ, full marks to the management, the way they've been able to kind of revive the bank. It was a hopeless case at one point 3 years back, and from there till now it's been fairly a good journey. But that said, I don't think this still kind of moves the needle, and you have the market reaction to this development. The stock is up by just less than 2%.
Yeah, at one point of time, actually it was higher by 4.5%. We've clearly seen a lot of profit.
Yeah, there is. See, one is there's been huge equity dilution over the last 3 years, ever since the bank was in trouble in March 2020. On top of that, you also have now the lock-in period of 3 years for all the shareholders who owned more than 100 shares. That ends in March 20. So you got some more supply coming in. Besides, the whole thing about Yes Bank really being able to meaningfully grow its market share, that is the key test. Right? If you see the way the stock has fared over almost 3 years now, it's gone nowhere. It's been moving in a very narrow band. Once in a while there would be chatter about some big private equity fund or big strategic investor coming in. You would see some bump up, but after that this rally never really sustained. I think it's still very early days. If you're looking at the stock as a long-term investor, I think it's going to be a really, really long road ahead. Don't expect any easy gains, at least not in the next 1 or 2 years.
Well, in Yes Bank's defense, Santo, I would just say that a lot of those growth metrics that you're talking about, of course, clearly there have been, in the recent past few quarters, there has been some improvement. If you look at loan growth, it has grown on a double-digit basis over the past 2 quarters. If you look at deposit growth, in fact, deposit growth in June quarter was much better than some of the biggies like ICICI Bank and Kotak Bank as well. So clearly, I think the bank is taking the step in the right direction. But of course, now it is all about risk appetite of an investor, whether they want to get in early and whether they have the patience to play the long game, or if you're looking for short-term gains, then probably there might not be any gains at all, right?
Well, that said, let's look at some of the other stocks on a watch list this afternoon, starting with Mahindra and Mahindra. Stock has hit a new all-time high again today. Big news there, CJ.
Yep.
About 1 lakh bookings in less than 30 minutes for Scorpio, and that shows some confidence or some demand for the upgraded version of Scorpio that M&M is planning to launch shortly. Now, the stock has been one of the star performers of this year, already 48% up in 2022. One of the best performers, not in the Nifty alone, but across the board.
Segments,
Many things working in favor of M&M at this point in time. One is that it's been steadily able to grow its market share in the utility vehicle segment. It's been inching up in FY 21, 22, and now 23 also. It's clearly showing an improvement there. And next comes valuations, I think the most important part. The stock has had a good run up, but according to analysts tracking the sector, it's still at a discount compared to, let's say, somebody like a Maruti, although the product portfolio is not exactly comparable, but still if you look at stocks like Tata Motors or Maruti, it's still Mahindra and Mahindra, given that it's got solid earnings, it's still the full valuations don't seem to be captured in the price right now. Besides, you have the EV play also. The recent development where the company has managed to get its EV arm valued at roughly 8,000 crore. That's also fairly a big number there, CJ.
I think, Santo, the discount for M&M clearly comes from the fact that a major part of his business is still cyclical in nature with respect to the tractor business, right? I mean, yes, the automotive or the transportation side of the business has been stealing the limelight for the past few quarters with the launch of Scorpio, and you had Thar last year, which was also a major success for the company. But I think still about 45% of your sales still come from the tractor business, which is very cyclical, and therefore I think you can understand why investors will not give it a premium over Maruti Suzuki, which can be a more long haul play in the market. But for me, I think you hit the nail in the head when you said that the stock has already risen 48%, 50% so far this year. Clearly, it seems like a lot of the optimisms have been baked in, because this market doesn't wait for optimism, neither does it wait for pessimism, right? It doesn't take too long to price in a lot of the positives. So I think a lot of those positives have really been priced in. And as far as bookings are concerned, I would take it with a pinch of salt, because at the end of the day, these are just a statement of interest they are not really actual sales. We'll have to wait and see whether these bookings actually convert into actual sales. You will always, if you speak to people in the auto industry, they will always say that, those sort of numbers and bookings are always sales gimmickry or marketing gimmickry, because ultimately what matters is what comes into your, account as a car manufacturer. So although it's a good, indicator of demand, but we'll have to wait and see how it converts into sale. For me, Santo, the other stock on my radar is JK Paper. Well, paper stocks in general were on fire today, and one of the major catalysts for that was JK Paper's Q1 earnings. Well,
paper stocks being on fire is not such a good thing.
Exactly. You caught me there. Well, blockbuster earnings, Santo. I mean, Q1 earnings, if you look at it from a year-on-year perspective, of course, it was always going to look much better because the year-ago quarter was affected by COVID. But on a sequential basis also, we have seen across the board growth in revenues, EBITDA, as well as net profit. Apart from that, of course, there is some indication coming in from the market that paper prices have been raised again in the month of August by almost 6 to 7% by companies. So that clearly is going to boost, the operating line for the company in the second quarter and possibly in the third quarter as well. So for me, I think overall, if you look at the paper market right now, the crisis that is unfolding in Europe, it is forcing a lot of plant closures there. And globally, the paper market is getting very tight. I think because of that, you could see, the paper manufacturers in India be price makers or price setters instead of price takers. And I think that overall bodes quite well for the industry.
Well, hard to argue against JK Paper at this point in time, given that in the last 6 quarters, if you just make an exception for the lockdown period, the top line has been consistently growing. The company has been doing fairly well across on all counts, and now at this point the cycle also seems to be favorable for JK Paper, and you're seeing that in the way the market is bidding up the shares. Yes. Just one quibble here. There's been a sharp rise in working capital days, almost a 5-fold increase in working capital days, and that's my only concern.
I think, Santo, that could be possibly because some companies are moving towards the strategy of holding more inventory because of the fluctuation that we are seeing in raw material prices almost on a weekly basis. I think a lot of companies are continuing to hold more inventory or raw material in that sense in order to make sure that they do not suffer any sort of crunch or supply issues and production issues. So that could probably explain some bit of the working capital days. But one larger point that I forgot to make earlier, Santo, with respect to paper companies and JK Paper in particular, is the single-use plastic ban that the government has implemented from July. If that, of course, we will have to see how successful it becomes, because generally bans don't tend to work very well in India, to the tilt. But if it works very efficiently, you could see an additional lever of demand coming in for paper manufacturers like JK Paper.
Well, Cipla, the next stock on our watch list, good set of earnings there. Overall, the numbers were better than what analysts were expecting.
Surprisingly better, actually.
And more importantly, the decline in India sales was also lower than what most analysts had penciled in. The company has maintained its margin guidance of 21 to 22% for this year. And according to Morgan Stanley, there's a good visibility of at least 2-3 complex product launches consistently for the next 2 or 3 years. And besides, HSBC has said that launch of Abraxane, Revlimid and Advair generics will be the key trigger for Cipla. Now, the stock has not been performing much. If you see this year, in general, pharma as a sector has not done well, and Cipla has been no exception to the trend. But if you look at the first quarter earnings, probably there seem to be signs of things gradually beginning to turn corner.
Well, Santo, I think, of course, there are not much holes to pick in Cipla's earnings. Overall, it's been a very decent quarter, given the challenges, of course, in India because of the COVID portfolio not doing that great. Apart from that, the US business, of course, has been a point of strength for Cipla in the past few quarters. But the only worry for me is, and I know this is a more qualitative issue than quantitative issue, is the fact that I think investors have built in a lot of expectations from Cipla with respect to its US product portfolio. I mean, you have had Morgan Stanley also suggesting that they could launch limited competition products over the next 3 quarters. I just hope that if the company does not deliver on this already high expectation, that could trigger a meaningful derating in the in the stock going ahead. We know that whenever market builds up expectation, it tends to leave a very little room for margin of error for companies, and I think that will be one risk that I would like to talk about. Apart from that, of course, margins has been another issue. Raw material prices have been rising for Cipla. Goldman Sachs believes that higher raw material as well as logistics costs could prove to be, a dampener on margins heading into the second quarter as well as the third quarter. So clearly, I think these are the two things that will make me a little cautious on Cipla.
Quick point on that part about expectations that you just raised, CJ. But if you look at the stock price, really, those expectations don't seem to be reflecting.
Santo, the stock has also not taken price damage to the extent that maybe other big performers of 2020 or 2021 have taken, right? That is probably the beauty of being in Cipla, that you don't tend to lose much. Whereas on the upside, I mean, the past 2 years, if you look at the past 3 years chart, I think the stock has been probably one of the best performers in the Nifty. So clearly there is a lot of optimism compared to Sun Pharma or Dr. Reddy's, who have been, struggling in their US portfolio compared to Cipla. But I just hope that, given that so much has been built up, not only by investors but management as well, in terms of limited competition launches, I hope that they have given themselves enough margin for disappointment there.
Well, last stock on our watch list this afternoon is Cholamandalam Investment and Finance. Again, a decent set of numbers there, and growth has been quite strong across all the product segments for Cholamandalam.
Yeah, you've been batting for the stock the entirety of quarter.
Well, the stock, if you look at the price performance also, it took a bit of a beating initially when the market had corrected in June, but since then it's managed to claw back most of the losses. It's done quite well since then. And according to Morgan Stanley, loan growth and pre-provision operating profits both have been ahead of what market was expecting. Brokerage house CLSA has raised the price target for the stock to 820 rupees.
Wow, Santo, I think I don't really have much holes to pick in Cholamandalam. Yes, it's a good stock, it's a steady stock, but probably not enough to excite me, because I wouldn't probably be looking for opportunities here wherein stocks are high growth stocks with reasonable valuation. Of course, valuations across the board have become quite reasonable if you look at the mid and small cap space. So for me, Cholamandalam probably would be third or fourth choice in the NBFC space compared to maybe you in that sense. That said, let's quickly take a quick check on the market, how we are shaping up for the rest of the trade in the last 13-14 minutes. If you look at Nifty, clearly higher by about 1.1% at this point of time. The Nifty Mid Cap 100 index is higher by about 1.7%, and Nifty Small Cap Santo nearing towards the 2% mark. So clearly a big bang day on the Lal Street this Monday. The only concern, Santo, for me would be the India VIX. It's higher by about 5.5% at this point of time.
That could offer some clues.
I don't know if maybe option writers are telling us that don't pin too much hopes on this rally at this point of time. There could be some negative surprises ahead. Probably.
Well, looks like that. Usually the VIX seems to react after the development.
Yes.
When the markets is rising, it tends to be falling back, and the other way around.
Yeah,
when
absolutely.
the markets are falling, but this time. You've been flagging this for the last couple of sessions now, how the VIX has been rising along with the market.
Sometimes, I mean, that is what is very curious. Also, probably we also have a major event, of course, later this week in terms of the RBI policy. So maybe some put writers out there are, preparing themselves for that. But clearly, I think there are elements in the market who are not totally confident that this rally is something that will last too long. Maybe some are betting against it. We'll have to wait and see, because high amount of skepticism is also good when you're making an up move in the market, because that gives you more opportunities for short covering or short squeeze.
Well, it's actually skepticism at this point in time which is driving the markets higher.
Yeah.
Well, that said, what do we have to look forward to, CJ? It's still earnings season, pretty much.
It is definitely. I mean, we have two big earnings coming out later in the day. Of course, ITC as well as Zomato. UPL numbers just came just before we were going on live. So Zomato would be very critical to see what sort of commentary comes in from the company, what sort of earnings comes in from the company. Remember, the stock had hit a record low in the run up to the Q1 numbers. Apart from that, ITC is there, the best performer this year. So ITC earnings will be critical to watch. And of course, tomorrow we don't have Nifty earnings, but we have Adani Green, Deepak Nitrite, two big mid cap to large cap names, which will also be detailing their Q1 earnings tomorrow.
Well, Deepak Nitrite has been kind of a middling performance for a while now, even as some of the other chemical names have done well over the last 1 month. But definitely Zomato and ITC will be the focus of
definitely. I mean, two headline grabbing stocks, two stocks that are favorite of retail investors, or at least used to be. Let's see how they perform.
Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and please do share your feedback in the comment section below.
And as usual, guys, keep following us on the social media links that you can see at the bottom of your screen. For rest of your financial news, stay tuned to moneycontrol.com and download the Money Control app. We'll catch you again live tomorrow morning at 9 a.m.